Hi everyone, hope you're all doing well. Today we're going to be covering 5 UK stocks that I'm watching and will be buying if the stock market pulls back and it goes to the right prices where I'm happy to buy. These are 5 stocks that I'm currently watching and I'm waiting to pull the trigger on at the right prices. And as always, if we're getting in the situation where the stock market has a possibility of pulling back, a great thing to do as an investor is start getting a watch list together of companies that you would buy, start working out which prices you'd buy at and obviously what points you would go sell them at in the future. But obviously the main thing right now is to start identifying companies that look great investments and the prices you would love to go buy these companies at. So when the stock market actually pulls back, you're not kind of going, oh, right, which company shall I buy? And you're rushing around trying to look at all these companies. You know, you kind of got your game plan ready in place when the stock market pulls back. And these are 5 companies that I've identified as 5 companies I would like to buy if the prices are correct. There's 4 stocks I currently own and 1 brand new one on this list, guys. And as always, if you could smash that like button, that'll be absolutely amazing. Now, I've put a Patreon link down in the description below. If you go on there, guys, I'm putting up some content exclusive on there. As well as that, I'm setting up a Discord group as well to share like UK stock ideas as well as like US stock ideas on there as well. Hopefully we could make it the biggest UK stock market investing community out there. Now, starting off at number 1 is Greggs. Obviously, if you know me, if you know my channel, Greggs was always going to be on this list, the home of the sausage roll. And obviously this stock is hurt because of COVID-19. It's had to close down quite a few of its stores and that's why the stock's been down, but it's done trials, they've all been successful and they're starting to reopen. And I think that Greggs itself won't be that affected by COVID-19. Sure, some of the sales will be down a little bit, but with a company that's pulling in the profitability, it does do a little bit of sales going down, isn't going to hurt it too much. Now, the stock itself is starting to get to prices where I would be actually willing to buy. The only thing I have to be really careful of is that I bought it so much, I can't make the stock make up a massive percent of my portfolio. The stock itself already makes up about 25% of my UK portfolio. And obviously, if I'm starting to push above 30, it's a little bit worrying. So I do have a little bit more room to buy, but not too much because I don't want it to take over my portfolio that much and rely on one company. All you have to do is look at Luckin Coffee. If something happens to that company, your portfolio gets pretty much screwed over. So I've got to be careful from that point of view. The ticker symbol for this one is GRG. It's currently £16 as I'm recording this video. The PE is 19. Now, when we actually get stuck into the growth of this company, a PE in 19 actually looks really cheap. So that's a really healthy PE that it has going on right now. It's got some massive in EPS and revenue growth going forward. When you look at this company, it's fantastic. It's previously done fantastic. It had a really good 2019. The growth looks absolutely amazing going forward. This is due to new stores. It's also going to be making its own supply chain. The profit margins have grown because of this and they'll carry on growing going forward because of this supply chain. It's set up a delivery deal now, so imagine Greggs with the hype of delivery around it. Unbelievable. So it's going to do fantastic. It's a company that offers no debt on that balance sheet as well, 91 million cash. So the balance sheet is absolutely fantastic. So this gives it room to do some other things, invest in the company further. And just to top it off, what we have a fantastic management team who are actually starting to buy shares in the company. Now, one of the big purchases was from Roger Whiteside, who is the CEO of the company. And when I see him buying shares in this company, gives me a little bit more confidence as well. So number 1 is Greggs. Number 2, another stock I own, my second biggest position in my portfolio, Hollywood Bowl Group. Now, this is close because of the COVID-19 and basically about 50% of the revenue comes from bowling, 25% from the bar, 25% from the arcade. Now, I see Hollywood Bowl actually starting to open up in July time, so I only see about a month away from opening. So this company is kind of nearly through it now. Now, I think the COVID-19 could affect it slightly because of the arcade. How do they clean all that? That could be a slight problem. But when I look at the bar areas are already quite social distance. So I don't see that bothering them too much. When I also look at the bowling alleys, they're already like 2 meters apart really between bowling alleys. And obviously you're going in the group you already are with, you live with. So You don't have to social distance on the lanes, which is a positive. And then all you need to do is have kind of like a cleaning crew that kind of, when you finish your bowling game, you go out and then they come into your alley, disinfecting the seat, disinfecting the bowling balls. Ta-da, everything's ready to go. So I don't see the revenue getting affected too much apart from the arcade side. And when you look at the prices it's at and the discount it's at, it kind of starts to seem a little bit of a bargain for me. Now I'm very close to adding into this one. Same again, I'm just wary about making it a massive position in my portfolio. The locations, the management team are fantastic. They get them in the right locations. They link it up to a lot of parks where there's, cinemas, somewhere to eat. So it ties in them areas nicely. And also the way it's going to grow is by opening up new venues. And when it opens them new venues, obviously the profit and revenue will explode. And as well as that, all the venues that Hollywood Bowl currently have are all profitable venues. Not one venue is not making profit, which is a sign of how good this management team is at selecting these venue locations, and I'm sure these new venue locations will be great for it. Now it is £1.63, it's trading at a very low P of 11, which is crazy because I think this company deserves to be trading at a lot higher P than this. The ticker symbol is BOL. It's got some massive EPS and revenue growth going forward. It had a good balance sheet. It is starting to get hurt a little bit because of the COVID-19 and not being able to operate. So the cash has gone down a little bit since I last made a video on it. So it used to previously have about 25 million in cash. It's down to 15 million in cash. It's got 30 million in debt. Not too bad though, that balance sheet's still pretty healthy, and I'm sure this company will be able to start paying off some of that debt when it starts operating again. And as well, we've got a little bit of insiders starting to nibble at this one as well, which is great. Number 3 is Dark Group, better known as Jet2, and I know a few of you guys have been asking me about this company and my thoughts on this company, and obviously since I've started talking about this, the stock has gone up quite a bit. It's pulling back slightly and people are asking me, is it time to sell these shares? What should I be doing with these shares? What's my opinion on it? Now when we look at Jet2, the growth is fantastic. It is my favourite aeroplane play out there. I think that Jet2 Dark Group is the best airline company you can buy out of every single one. Forget Delta, forget American Airlines, forget EasyJet, whatever, just forget them. Dark Group in my opinion is the best airline company to invest in out there. The ticker symbol is DTG, and for me, I don't really care about 40% on getting on this stock. I'm not selling out at 40%. I think this stock is massively undervalued. In 2 to 5 years, this company will be up massive. I'm hoping to make 100+% on this stock, so I'm definitely holding it at these sort of prices. The P is 7. That's right, P7, which is extremely low. It has 1.7 billion in cash and 90 million in debt, so the cash to debt is nearly double. Obviously that's going to be hurting a little bit now with it not being operating, but still, cash to debt, absolutely fantastic. Probably one of the best balance sheets I've seen in an airline. I can't think of an airline that has double the cash to debt out there, so it's a fantastic balance sheet. There is some insiders starting to buy this stock, but when we look at the potential of Dark Group, you only have to look at what they were doing previously with the revenue growth, the EPS growth. The profit growth was fantastic. Not many airplane companies are able to grow their profit that much. You look at Dark Group, their profit growth has been insanely good. Not many companies can do this in this airline industry, and this comes from great management. It's got a great following. Like, there's not much loyalty in the airline space, but I feel like Jet2 has that loyalty. You never see an empty Jet2 plane. The prices are always cheap. It's a budget airline, budget holiday package airline, and their packages are far beyond what everyone else is offering out there, which is really good. And obviously, unfortunately, the collapse of like Thomas Cook, maybe even like Virgin, for example, like all these companies, like airline companies, are on the the brink of being bankrupt, and I don't want them to go bankrupt, but there's going to be one company that's going to capitalise that, and that's on Dark Group, because they're not going to go bankrupt. So Dark Group's in a really good position, and the growth that they have, the new destinations they'll be able to put in place, the airports that they'll start operating at as well, it's only going to help them. So I love Dark Group, and like I say, for me, I need 100% gain on this one. Number 4 is JD Sports, and I'm always wary about the kind of fashion industry, fashion shops, high street shops. It's not an industry I like because of the footfall decreasing in the high street, and like it's all about online right now. But JD Sports is a little exception for me. The great thing about JD Sports, it's not a brand, so it offers multiple brands. So if a brand's in fashion, if Nike is in fashion, it can stock a lot of Nike. If it had Adidas in fashion, it goes to Adidas. If there's a new brand that suddenly takes over, it can make a deal with that and start selling that brand at JD Sports. Because it's not a specific brand, that gives it a massive advantage. It's got multiple growth sectors internationally, European. It's also looking at going into gyms now, which is fantastic. So it's a multiple income stream company that's a high street retailer. So I don't even know if I could call it as a high street retailer now, but yeah, it's doing really well. Ticker symbol JD. You pay a bit of a premium on this one, I mean 26p, but when you look at the growth potential, the profit potential, it looks fantastic from this company because of all the expansions that it's making and investing into the company for its growth. It's got 346 million in cash, 228 million in debt, so the balance sheet is really healthy, and that's only going to help the expansion. So for me, JD Sports, fantastic company, and definitely one I'd like to add a few more shares in. And my last one is a stock that I've not featured before, which is Rightmove. And I only kind of thought about this company because my girlfriend was actually moving flat, and she was trying to get hold of a flat, and she was always on Rightmove. And when she was going on Rightmove, basically a lot of properties were getting listed on there. And even though we're in the COVID-19, a lot of these properties were going within like 2 days. And I was like, wow, if the demand's like this for property still, that's insane. And Rightmove obviously are in that property industry, offers a property portal on a lot of properties that are being listed. It's a little bit of a premium of 28p, but if you look at the growth, it's been fantastic. The balance sheet's pretty good. It's got zero debt. It's got 36 million in cash. Under £5 for this one, I'd be really interested in it. But yeah, I think this is a good company that's growing fantastic. And I've seen the demand that's currently out there, which is really surprising after the COVID-19. But it's doing fantastic, and I think this is going to be, when you look at the future of people that want to look at properties, the best place to go is somewhere like Rightmove, where it's got all the properties on there. You don't have to go through every individual estate agent. It's got every estate agent on there with every property, and obviously it's got the biggest market share in that kind of industry. So for me, Rightmove is definitely one that's really interesting me right now. So guys, those are 5 UK stocks to watch. I hope you found that really interesting, and maybe you discovered a new stock today, which would be awesome. If you did, hit that like button down below. That'd be absolutely amazing. Subscribe if you haven't, and I'll see you on the next video.